Welcome to the Morning Ping podcast, where coffee, innovation, and community kick off the day. This podcast dives into bold ideas, startup realities, and the people rethinking everyday experiences through technology and grit. Hosted by storyteller Justin Starbert, alongside Ping co-founders Jane Lo and Rob Whitten. The Morning Ping brings a distinctively New England edge to building what's next. Grab your coffee and join our hosts.
Welcome back to the Morning Ping. My name is Justin Starbird, and as always, I am joined by co-founders of Ping, Rob Whitten and Jane Lo. Guys, great to see you.
Hey, good to see you too.
This is exciting. We get to welcome in a new guest today, Sherwood Neiss, the managing partner at DC VC. Wow.
There you go.
First.
There you
put
go.
Too much pressure on you, I think.
Yeah. I didn't have enough whiskey, apparently. Great to see you guys as always. Today is exciting. We get to welcome in a new guest, Sherwood Neiss, the managing partner at DCVC. Yeah, I said it right there. Got that time.
D3.
Yeah, D3. All right, we're just gonna keep that. And Woody, I am so happy to get to meet you today, and so glad to have you on.
Well, apparently we picked the wrong name for a venture fund, but it is absolutely amazing to be here.
The pressure was all on me there. I think totally messed that up.
Fear not. It's a name. It doesn't matter. It's what we do that's more important.
So talk a little bit about that, because we're so fortunate to have you here on not just the show, but part of Ping as well. So talk a little bit about the fund.
Okay. So D3VC is a venture fund that was built off of the idea that the investment crowdfunding industry is not going to scale until we get institutional capital in the space. And institutional capital is not going to get into this space until they have a way to figure out how to invest in companies just like Ping. Now, Goldman Sachs will never have a team that's designated to invest in companies like Ping because it's too small. It's a startup with amazing potential, which is why we invested in it. We actually got it. We saw what they were doing. Love, Rob and Jane as leaders as well. But they all operate in this world, which is we have to have de-risk investments, and investments need to come in at a later stage. But they have these mandates that are like, we need to invest in startups. We need to invest around the country. We need to invest in women and minorities. And it's very hard for them to execute on those mandates because where are the mechanisms to allow for that investment to happen? So, having written the law, having built this database that collects all the information on companies like Ping that are raising capital from the minute they file their Form C all the way through their offerings, through their annual reports, with this data set, we were able to see signals. And so with those signals, I sat down with 3 data science PhDs that are much smarter than me and said, listen, I started a company. I was venture capital funded. I sold it to a private equity group. I helped write this law that is now a $3 billion industry. Over 11,000 offerings have taken place by 9,000 companies. I can see what success looks like in this data set. If we can take my brain, the signals that I see in my brain, the database itself, and all the data fields, and come up with an algorithm that looks for predictive signals of success, I think we can make an investment thesis, a venture fund, where we can look at the companies that score highest in that, do the normal diligence that any VC would do on these companies, and then make an investment decision, like we did with Ping. We saw the numbers, they scored high. We met with Rob and Jane. They were, and we'll probably get to all of this, and I'll probably be repeating myself, but it's not just that they had a vision, it's that they were able to talk about what they wanted to do very clearly. And it was a very narrow objective of how they wanted to achieve what they wanted to do. We see a lot of people doing a lot of broad things, but let me just get back to the fun for a second because I'm going to get on a tangent. So we built this algorithm. We get these signals. We have an investment committee. There's 7 of us. We meet on a weekly basis. We go through the data. We go through the analysis. We have investment memos, anything that traditional VCs will do, and then we make our investment. And so what I was trying to do with this Fund One is prove to Goldman Sachs, hey guys, we now have a way for you to take $100 million. Now they're never going to give me $100 million, but give us 50 million. And we can figure out how to deploy this into these startups and small businesses all across the United States through our predictive signals. And what it does is it allows you to meet your mandates, and it allows us to show you how we've had these signals that are actually working. Like 10 of our 22 companies that we've invested in have already had follow-on rounds at higher valuations, higher markups. The average revenue increase is about 167% of our companies, our investment portfolio companies. So the goal with the fund is not just another typical early stage venture fund. It is now a mechanism under which we can get institutional capital to startups just like Ping.
Wow. I started off the conversation thinking I was under pressure for not saying it right, but Rob and Jane, I mean, to be included in that group is going to feel incredible for you guys.
Oh, it feels amazing. To meet somebody like Woody that also has a vision, also sees our vision, and is going out and just violently executing against what he knows to be true. It's great. It's amazing, and I mean, I think it's great for the Goldman Sachs of the world, but I think it's also great for the other investors on WeFunder to have like some actual due diligence done because not everybody knows how to do it, right? Like we have a lot of, more everyday investors and they can do kind of, top level type, I like this idea sort of due diligence and maybe look at our LinkedIn profile. But Woody can dig down, right? And it was immediately obvious when we first spoke with him that he already knew about he saw the vision, he got it, he had already done a bunch of research, and now he was just like refining his estimate of our company and our potential. It's so refreshing to talk to somebody like that, and it'd be like, yes, you see, and also, in some ways, he can ask the right questions to help trigger things for us, for how to, make our next decision. Or he often, there were a couple things he touched on that, we'd been thinking about, and he offered a different perspective, like, how our next raise should go and, where we should stay with, the WeFunder and that sort of thing. Like, so it's also helpful to have really smart money investors, like Woody, and to be able to have him on the show like this is exciting.
Yeah, I gotta believe that, especially after some recent experiences, having people ask real questions that matter to the bottom line and can help and see the vision is also really rewarding, right, Jane?
Yeah, that's right. Yeah, we can literally walk into a room full of investors and know if like they understand where we're coming from. Because, our idea is not something that truly wealthy people can sometimes understand because they don't go through drive-throughs, they don't know it's a problem, but people with imagination can.
Yeah,
Yeah.
yeah,
Or
absolutely.
like, people who live that life, yeah.
Right.
But yeah, we can always tell.
Yeah.
Woody, how do you apply? So you mentioned taking your life's experience and being able to distill it down into evaluating opportunities like this. How do you not get caught up in the next AI or the next major trend, and you're able to see something like this, which is I would say outside of the box because it truly is a box, right?
Mhm.
It's such a unique way to solve a problem that so much of urban America sees every day.
And you just hit the nail on the head, Justin. When we're talking about AI and and AI is transforming what's happening in our lives. I use it every day. So I'm not discounting it at all. It's a different target audience. And it takes a lot more capital and it's got huge implications. And there are massive venture funds and private equity firms focused on that. We don't have we don't have their checkbook to be able to write those type of checks. And it's a very different mindset that we're focused on. When we wrote this law, and the thing that surprised me most is we wrote the law and we were thinking this is going to really benefit Main Street businesses. It's going to benefit startups that are not in Silicon Valley.
Mhm.
But what I didn't realize when it started to be applied is that the biggest impact that these companies were going to have, at least the ones that got it. There's a big difference between companies that crowdfund and don't get it and companies that crowdfund and do get it. And the ones that crowdfund and do get it is these customers that are willing to write a check for that investment. It's not just capital. It is advocacy. It is they're giving you money to actually be a part of your cap table so that they're aligned with you. They're not going to sit back like you invest in, Google or whatever on the stock market and you hope it appreciates. These are customers that are saying, what can I do to help you be a better company? So the companies that get it are immediately like, okay, we've got this cap table of all these investors. Let's make an army out of them and make them do marketing for us. The really smart ones are just like, these are our marketing messages that are going to come out. All I need you to do at a minimum is retweet, repost, like, share. If you want to be super great, here's a script that you can read out loud about why you invested in our company. And you can change it however you want. But there's this thing that, so I wrote a book called Investomers. And the whole premise of it is the companies that turn their customers into investors are the ones that are going to be the biggest, the unicorns of the future. And in the back of that book, at the very end, I was talking about what I saw as the future of investment crowdfunding and social media. And it's the convergence of what I call the influencer. So we've got these influencers out there that are talking about, I actually just bought this marble dish rag this week because I was just like, I must have that. This person is just talking about, want the scum from the rag. But it works. Like it just works. And the companies that now take their investors, these small little people that have a big audience in many cases, and say, here's a script. Talk about why you love Ping. Show the product in the background. Show you at the actual device. They're going to be creating marketing material for you. You're going to be able to repost and retweet and do whatever with that. And that's going to amplify the message. And that's going to help bring more customers in, more engagement from future investors. It's going to help scale the business in ways that you were not expecting. And so it's not an easy thing to do, by the way. But the companies that jump on that and see like, let's figure out little stepping stones of how we engage this audience of ours as brand advocates. They're just going to win down the road.
You beat me to it because I was going to ask you about Investomers and how to mobilize your investors into customers. So I really appreciate you jumping into that and sharing what that means, because often, not all of the companies that start a campaign get that. Rob and Jane, I know for a fact you guys have been working hard to create the assets that you have today for investors to be able to use for the acquisition of future customers as well. Talk a little bit about what it's been like, for you so far to see investors turn into, your customers and then coming back and reordering at the pod.
Well, it's funny because it goes both ways. Sometimes customers turn into investors, and then investors turn into customers. It's really cool because we've had a lot of people come, try out the pod or swing by or something, and then later they show up on the WeFunder because we have the little things. Jane made some little QR codes, cards that we can hand out. I was like, hey, think about it, man. If you want, you can jump in, or and they often show up. And then the other way, we're, oh my gosh, I invested in this and now I get to come out and try it. So, and it's great because, not only is that a great flywheel, of, investor flywheel, with investor customer relationship, but also they make some of the best feedback people, because like once you're invested in something, you're like, listen, that last drink wasn't quite, as an investor, like now you have like this very like just matter of fact feedback to make it better. Not, I'm trying to give you 4 stars or 5. Like you're not thinking like, oh, I'm trying to, do this thing for your review. It's just like, as an investor, I think I would do this slightly differently. And that's just a completely different conversation. Now they're on our team. And I love that, because now like then we, put away all the pretenses and just get better and better.
Jane, is that motivating from a customer experience perspective for you to make sure that every opportunity to interact is a five-star, five-star experience?
Oh yeah, for sure. I mean, but that's where we started, right? Was to always ensure that we would get a 5-star customer experience out there. But to Rob's point, it is a great like virtuous cycle of incorporating more feedback and making sure that experience tends to be good, continues to be good, and that it always stays good. Like we always continue to innovate on top of that. So it's definitely very useful.
Yeah, and it can translate to our socials and to the we find like it all kind of ties in together, which I think is great because there are some things like how a drink tastes, but also how are you running it? What's your next step? Like what's their next feature? Like where are you going to go next? And all that sort of thing as well. So it just ties into every aspect of the business, and so Woody's exactly right. We're trying to do that more and more. Figure out how our smart money can do more work for us, that how they can be a bigger part of the company and drive us forward.
Woody, this
And
might, oh,
well, no, I just want to say, I think Jane really hit on something there with the excellence point. Like, coffee is ubiquitous. Like, coffee's everywhere. You got Starbucks, you got everyone that's doing it. Why ping? Like, why do we need another one? Okay. And it's that focus on like everyone sort of feels like Starbucks is sort of going, like, where are they going? And where is that experience and where's that excellence? But what Jane was talking about is if coffee is everywhere, how do we make sure excellence is top of the thing that we're focused on? Because that's what people will come back for. So when Rob's talking about that brutal honesty that they're getting from their customers, that are investors, yeah, you know what? It's not just a customer that's going to write a bad review because an investor that is a customer is not going to write a bad review because they just want you to get a good review. It's taking that feedback to make sure that you're continuing to be as excellent as you are. And I honestly would not be surprised if, and I love the sort of the slow momentum that they're building here. The big fear with a lot of companies is they raise a lot of money and they just spray and pray. But they're fine tuning the pod. They're making sure it's delivering the excellence with every cup that goes out there for the experience of the people that are using it. And I wouldn't be surprised if the investors that they have in there are going to be like, okay, you've now told me these are the criteria for the locations where we're going to expand. Hey, I'm raising my hand. Like, I think we meet that, we meet that criteria. And they're going to actually bring, I wouldn't be surprised if they bring the future locations or a list of locations at least to them as to where they should expand, why they should expand, why those pods will be successful in these areas where they expand. And by the way, if that investor is in that community, which is not by where Rob and Jane are, they're going to be keeping an eye on it for them. So it's just like, Rob was saying, it's not a flywheel of just capital. It's a flywheel of community ownership and participation in building something excellent to what Jane was talking about.
so funny you mentioned that, right? Because Rob, don't you get unsolicited suggestions for locations all the time?
Oh, it's great. I love it because as soon as I explain a ping pod to somebody, within a couple of days, they'll text me a couple of photos like right here or right here, or it's like, oh my gosh, the Starbucks went out of business. Can you like take that spot? And yeah, well, the great thing is too, we have the franchisee sign up list right now, and so we have like 18 or 19.
Yes,
Yeah,
yeah.
people already signed up, and we haven't been advertising. It's actually a little bit hidden on our website, but the true like believers that look for it and are like, how do I become a part of that? They're already signed up, and a couple for multiple locations. So you're exactly right. Like our customers and our investors are gonna drive where we expand to first because they're also going to turn into franchisees. And one of my favorite things about our business, I love talking about it, is how I think the way we grow is just great for middle class Americans, right? Middle class wealth generation is something that a franchise like this could absolutely, be a part of, right? To allow people for under 200K to open a site and pay back within a couple of years and be able to open another site. That's an amazing franchise. We're aiming to be a best in class franchise so that other people like us with some money and a lot of motivation can actually increase their wealth without having to work for somebody else, you know?
Woody, how does Ping stand out relative to the thousands of deals that you evaluate each year? I mean, I hear you, in terms of some of the things that you're evaluating, but they're actually taking your advice and really the framework that you've put together, and they're actually making that happen. But did you see that in their potential beforehand, or talk a little bit about that initial like reaction to things?
Well, the basis of all our research in terms of the companies that we look at comes from the algorithm. So there's a lot of number crunching that just happens there. And if you hit that minimum there, then we start looking at what are the things that an algorithm doesn't necessarily pick up per se that are uh, that are not quantifiable in the normal sense. And so, qualitative type of measurements. And that's where you look at the team. And so that's where we did our research on Rob and Jane. And we dug into, not only who they are, but why they do what they do, why they're passionate, why they have the ability to execute on their vision. Have you done something like this before? Because you want to give, you don't necessarily want to give money to people with just a good idea. You want to give money to people that you know have the ability to not only spend that money rationally, but to execute on a strategy within the confines of the amount of money that they have raised and what they can do. And you want to see milestones related to that. And I think, that's what we got very comfortable with Ping and these guys right out of the gate. I have to I have to go back to this again. And by the way, this is just one of my biggest pet peeves in the industry. So if someone's listening to this and they can learn from it, I'm more than happy for you to know that this is a pet peeve of mine. If an investor asks you a question on your offering page, you have a responsibility, whether you like the question or not, to answer that question, because they really want to know in earnest why, because they're interested. They clearly wouldn't have asked the question if they weren't interested in investing. Okay, so do them the honor of investing in it. Now, Rob and Jane, I mean, I could actually probably count the minutes. It was amazing. It was just like these guys were on it. Like they knew that, we have an audience of people that want to invest and they didn't waste any time. And it wasn't like a one sentence answer. It was, we went into sort of some technical things like where's the water coming from? Where's the water going? If you're dropping these things out in the middle of nowhere, where's the power come from? Who's going to be, who's taking care of the machinery, the insides of all of it? This wasn't, a question that hadn't been thought through. And it was one that they were able to put on paper. That in itself, right there, not only built credibility for us, but for every other person that's looking at this offering and deciding whether or not they want to invest. And so they had the idea, they had a differentiating point of view on the idea, they had a team that had the experience to be able to take this to the next level. They clearly had traction. One of the things that we do not do because we wait and see what the crowd is doing. We don't invest in a deal until it's got about $124,000 of interest from other people. And there's one of the reasons that we do that is I want to make sure that the financials that are signed off are reviewed by a third party. I love entrepreneurs. I know that we're all busy. I know that doing your financials is probably not the most important thing for an entrepreneur that's trying to scale a business. But having a third party CPA review the financials is very important to us to know that there's actual some validity behind those numbers.
So let me jump in and explain that for just real quick. So at 124 for our audience that's watching and listening, at 124,000 and under on a crowdfunding deal, the funds can be self-reported by the entrepreneur company that's standing up the a community round. After 124 to 1.235 million, they have to be reviewed by a third party
Right.
CPA and auditor.
And
So
it's fairly in depth. They go through all your financials, and it wasn't just a check the block sort of thing. Like it was an actual audit of everything. Yeah.
and then at 1.235 million to 5 million, at once at that 1.235 million mark, there's another audit that needs to be completed as well. So, Woody, great
But
on that. On
you
that.
don't, if it's the first time, you don't actually have to have an audit, just to review. But once you do have an audit, you have to have an audit ongoing.
Correct.
Yeah.
But great call out on the 124 because that is a
Mm.
threshold that not everybody gets to, and is definitely a signal that there are opportunities within that community.
Yeah, and it's not just the 124, it's how, we look at the number of people that come in because to the whole point of this Investomer thing, we want to invest in companies where not only we get it, but now community of people are now this army that I've been talking about that are backing it.
Mm.
And so that's been a big focus for us, when we were looking at the deal is, do we have the signal from the crowd? And these guys had it.
It's great. Talk a little bit about, the history of venture capital has always been concentrated and relatively small to both the number of institutions as well as the number of individuals that are able to participate. Do you see the crowdfunding as a real democratization opportunity for more people to participate? How do you see that this space growing? Not to get so like industry overview sort of thing, but I feel like that's really important as well as to drive more eyeballs to campaigns like Pings.
Yeah, I mean, VC, by the way, investment crowdfunding and what we've done does not displace VC. It runs in parallel, it provides deal flow to VC. It is just coming at an earlier stage of this whole thing. So we don't look at ourselves as competitive with venture capital. We see ourselves as very aligned with what they're trying to achieve, and we have partners that we talk to as well, so that we try and get our companies graduated to the traditional VC type of route. But I think, when we were pushing for this legislation in Washington, D.C., one of the things I kept on saying is, most entrepreneurs do not live within proximity of Silicon Valley or New York
Mm.
City or, these money centers in Boston. And so why don't we meet the entrepreneurs where they live? We can't do that right now because we don't have the mechanism that allows capital to get to them. There's plenty of capital out there, but the mechanism under which we have it doesn't exist. And so what I was saying in building this infrastructure, which is a very regulated thing, we took the idea of Kickstarter and Indiegogo and we applied that whole framework of crowdfunding, early stage finance, and having Jason Best and Zach Cassidy Dorian were my partners in crime when we were pushing this through Washington D.C. All entrepreneurs as well. Jason was venture funded as well. So we just took our experience as being venture funded companies and what were VCs looking for and built that into the infrastructure of investment crowdfunding. In doing so, we've now opened the door to more people across the United States, 2,300. So, I constantly I throw numbers out there, but all these numbers are based on true fact. Like we built this database. It is the longest running database that goes to day one when this industry started that collects about 150 data points on every company. I slice and dice every offering by where they are, what they do, what industry they're in, if there's women minorities, however you can think about it, the valuations, the age of the company. In the beginning, when this industry launched, 65% of the companies were pre-revenue startups. So the riskiest type of companies, the ones that everyone kept on saying is you can't trust them, they're going to go out of business. We're a decade into it. Now 70% of the companies are post-revenue established businesses that have an average of $1 million in revenue. Boom. This whole thing pivoted and changed. Okay. The fact that we're getting capital throughout the country, VCs can't do that. The fact that the companies that are coming into the marketplace are not your, pre-revenue, the most risky ones, is a fundamental shift in the opportunity as well. So venture plays in a really, really important role, and they have, in many cases, cases, they can write bigger checks. They have deeper pockets. We're hopefully going to get there with our fund too. Um, but it's a everyone sort of plays a role. And the other thing, by the way, that I really, really love about investment crowdfunding that I did not realize was going to be this case is that 40% of the people that are raising money through investment crowdfunding are women or minorities. So you've got a founding team, the founding teams, just like these two right here, usually, more than one person. It's great to see the women and minority representation on these founding teams. And it's about 40%, like I said, of all the offerings that are out there. That is a significant shift from, traditional venture capital, which claims to want to invest in women. By the way, when you look at the women-run companies, just, look at the data. We have the data. It just
Mm.
shows that they're growing their companies. They are really, really, it's not that they're stingy, they're just really smart about how they spend the money. Women really, I truly believe they're like, I'm treating this money like it's my own money. Like, and I don't want to put, men down, but I just feel like women are much more judicious in how they're going to write a check
You're
than
not wrong.
Rob, tell us,
Yeah.
what's
Oh, yeah.
happening?
We once, when we were starting out in our first pilot, when we did our "Don't Look Behind the Curtain" version of the pilot, we actually had a pretty in-depth argument about a $20 adapter I wanted to buy to make sure I didn't have to carry my computer adapter back and forth from home to the trailer, right? It's good to have somebody that's constantly looking at that in a very critical way because it's easy to get into startup mode and you're like, we need it, just get it, right? And to have somebody do exactly what you're talking about is it makes the dollar stretch, and we're really good at stretching our money.
Well, Rob calls me frugal, but I liked how Woody put it, which is judicious. I like that a lot better.
Yeah.
I'm gonna use that from now on.
Yeah. Oh,
But
yeah.
yeah, I think it's just well, I thanks Woody for that for the plug for women. I also think that I operate from a scarcity mindset. That's just like how I grew up, and so I think that's why I apply that same level of frugality or judiciousness to how we spend our funds, thinking about how other people put their trust in us
Yeah.
through their dollars, right? And so like
Mhm.
we want to make sure that every dollar counts, and we generally do that. Um,
Like all
but
our families have invested. Like I can't waste my niece and nephew's investment, or her sisters, or
Right.
like
yeah,
we are stewards of this, but it's
yeah.
not just us anymore. Yeah.
I try to think about as we scale though that I've heard, and maybe what do you have an opinion on this? Like you cannot just stay in the scarcity mindset forever. Like at some point you're gonna have to like really grow the business. And so I try to keep that in the back of my mind. But yes, we
Because we are
always
starting to spend more now, like we now have some offices and
yeah.
hiring and that sort of thing that, we're very careful about it, but, we couldn't grow out of our office trailer anymore. Like that
Right.
wasn't going to be sustainable. So, I think recognizing when that tipping point is also super important.
Yeah.
Yeah.
But yes, I appreciate the plug, Woody, because I think that we kind of suffer from the feminine products problem where,
Mm.
women go in and they pitch like a bra or something to men who are like, I don't know about anything about this, and so they don't get any funding. And in our case, it's more like wealthy investors who like don't understand drive-throughs. Like I've never been through a drive-through, so they don't understand it. So from a crowdfunding perspective, it's this makes way more sense. It's like awesome that this exists because
Oh, yeah.
how we meet our people.
Or how about that just terrible advice that's true that a lot of female founders get is the best way to go raise money from a VC is to get a male co-founder. Like that's like a very sad truth.
That
And
Yeah.
so
or talk like a man, dress like a man. Those are the
Right.
things.
yeah, I mean, plenty of our, female co-founder or founder friends, have said that, and it's true. Like that, if you look at the numbers, so to
Yeah.
see that changing is
40% is very
it's
impressive.
very
Yeah,
encouraging.
that's
Yeah, I
encouraging.
had no idea I'd gotten that.
Yeah.
Yeah,
And
it's great.
one of the things that so we're heavy in, the funding space, the data space, but I have not given up on the regulatory and the policy side of things as well.
Mm.
I have been very, very headstrong on why we need to raise the limit from 5 million to 20 million, because we need to have this on-ramp for people like you that want to stay within investment crowdfunding to continue to raise at higher amounts outside of the $5 million cap. And if we've proven that there's been negligible, and I mean negligible fraud, fraud happens all the time in Reg D offerings because people just take people's word for it, and there's no governance to what's happening there. But we have such a structure. It's so hard to commit fraud from 1,000 investors coming on a platform, picking you apart than it is through a private Reg D offering happening offline. That's why we're trying to push for these regulations for higher caps, for less costs when it comes to some of the compliance related to it. And I think this will help the companies as they scale. But you're right, at some point you graduate out of this and you will face the demons that are the traditional financiers and owners of the marketplace. And I've way early on, I remember talking to some representative in Washington, and they're like, is this really even going to become a thing? And I was just like, well, here's the deal. Like, at the end of the day, this is going to become a thing when Goldman decides that they're going to acquire the industry. Like, they buy everything. Like, they own everything. We just need to prove that we've created a way, a structured, regulated process under which people can raise capital. Small amounts, like the average raises are not crazy. They do it in milestones. They're hitting these revenue targets and these valuation growth things that prove to not only the Goldman Sachs's, but to your Prequins, your Crunchbases, all the people that sort of monitor the data side of the industry, that we should be paying attention to what's happening in this whole ecosystem, because these are, again, to what I said at the very beginning, the future unicorns. Now, these are the future unicorns that aren't going to be the AI ones per se, but you're looking at two that I think can take over the coffee industry in a way that nobody knows is coming.
Yeah. To not to sound, at the risk of making this episode even longer, because we're at a good point now, but I feel I'd be remiss if I didn't ask, because Rob and Jane have done such a great job of pushing through the first half of 2026, where candidly there's been a pretty significant downturn in terms of the amount of investment into regulated crowdfunding campaigns this year, comparatively to years previous. What do you think, what do you attribute some of that you know, uh, lack of investment, or this stall at the moment? Because I am with you in terms of being extremely bullish on the space in general and where the opportunities are. I see this more as a little bit of a blip, some of it related to administration, some of it related to economics, some of it related to a war. Are you seeing anything? I mean, is that it? Is it that simple, or do you see any other trend?
Oh, Justin, so Doug Elinoff of Elinoff Grossman and Scholl were the first law firm to really get behind what we were doing and provide a lot of guidance, because we were three entrepreneurs that did not know law. We just pretended like we did. We wrote a law pretending that we were lawyers. Um, Doug, I asked Doug the same question that you just brought up, and Doug's response to me was fascinating. He looked at me and goes, Woody, congratulations. You're having your first cycle.
Hmm.
Every industry has cycles. It doesn't matter if it's a startup that's going through it or if it's investment crowdfunding as an industry. You have your boom and your bust. And you were going through a down period. He goes, but what is the data? Then he asked me, he goes, what's the data telling you? And I said, well, Doug, it's interesting because I do see less capital, but the number of investors that are coming in is not it's lower, but it's not shrinking at the same rate. And I said, so that tells me that the investors that are there have more conviction and they're writing bigger checks. And he goes, yeah, see, that's the thing that other people that will just be critical of the industry because it's going through a cycle will just say it's, down and out. But you that have the data can see the conviction that's happening from the people that are sticking around and are willing to write bigger checks because they understand the opportunity here. And by the way, even if we're going through a cycle, but that doesn't change the dynamics of what happens with startups. if you still identify a startup at its earliest stage and its lowest valuation that has great opportunity that can execute, whether an industry is going through a cycle or not, that company can still go from A to B up here. And your returns, until they have their exit, of course, it's all on paper, but they can be astronomical in some cases. That doesn't change. And so, I look at that question that you brought up as, people that are they love to just the naysayers that are out there. I will always be I created the lemonade and I'm drinking it until I die. But luckily I've got the data to back up why.
So for companies like Ping that have had comparatively to, you know, uh, previous campaigns, all the success in spite of this downturn, does that make you want to double down on those more successful campaigns and companies?
Yeah, I mean, part of what we're planning on doing with Fund 2 is going back to the companies that we've invested in and helping them with their scale. So, I got to go out and market and sell a Fund 2 to a bunch of Goldman Sachs type people as to why they should invest in it. But I think we got the data to prove why. But, then we can come back and, help Rob and Jane, get it to the next level. But we also don't want to be, again, the sole provider of that. We want to help get them a larger community because at the end of the day, particularly with what they're doing in this consumer brand type of business model, the more customer investors that you have, the more likely that they will succeed and be even bigger than they think they are in the future.
That's awesome. Jane, Rob, did I not ask Woody a question that you wanted to ask him?
No, I think you covered it really well, and this is a great conversation. Like I knew it was going to be good, but I didn't know it was going to be this good. So
Stuff, yeah.
yeah, this is great. I think it's going to be an awesome episode for people to listen to. So thank you so much,
Yeah.
Woody.
Thanks, Woody.
Sure thing. Yeah.
Yeah,
Anytime.
Woody, I really appreciate you joining us today. This has been wonderful. So, I thank you, Rob and Jane, for your candor and your insight as well. It's always a revelation when founders are so vulnerable in terms of what they're going through. So, really appreciate that too. On behalf of my co-host Jane Lo and Rob Whitten from the Morning Ping, as well as our special guest today, Sherwood Neiss from D3 VC. You've been watching the Morning Ping. Until next time.